Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Tuesday, September 8th. And welcome back from the Labor Day long weekend. I hope everyone has come back nice and refreshed and ready to trade. Well, firstly, as usual, we'll have a look at the S&P 500, and here we see the buyers coming back into this market, so quite a bit of indecision in this market. One day the market's up, the next day it's down, and we have the buyers building solid upside momentum for today, closing with control, strong commitment, support coming in down below the Tenkan-sen indicator and around the 1925 level. The market breaching up through 1955 resistance and just testing above 1968 resistance. There is a possibility of the market continuing to trade higher off this good solid build of momentum. We'll be looking to the Kijun-sen trading around 1990, 1989 to hold as resistance, and if the buyers are strong enough to breach through there, we could find some resistance coming in around the round number 2000. Now, just looking at a pattern that seems to have formed here, and here we have a symmetrical triangle. The market making a series of diverging peaks and troughs, and it's a congestion area, and what we'll be looking for here is a breakout. Now, we have had the market testing just around the border line here of the upper boundary here of the pattern. These patterns can be either continuation patterns or reversal patterns, and the way that the market has built momentum here, and we've just had that close just slightly beyond that boundary, suggests that we certainly could see this as developing as a reversal pattern. What I want to see here is some strong follow through to confirm, and if that's the case, we could end up seeing the market develop to a target the width of the pattern here, which would be something up around here, roughly around this 2061 region. If we trade to the downside, we'll be looking for a breakout down below, a close down below that bottom barrier, and then some follow through. Moving next to the Dow Jones 30 industrial average, and here we've seen a similar type of candle, a white body candle, buyers in control, strongly committed, a Marubozu candle with the market opening at the low and closing at the high, the bullish type of candle, the most bullish type of candle that we can have, and this suggests buyers are building momentum here for an assault on this resistance up above. We have potential resistance at the Kijun-sen around 16542, and then just at the 16588 region. This market remains bearish in that longer term time frame, and only just bearish in the medium term time frame, but trading below the Kijun-sen. But that could change if we see the market break out up above that pink line, the Kijun-sen. The Chica span is still supporting the bearish bias in that longer term time frame, and suggesting that we still have some negative momentum in this market, and that suggests that if we do see resistance coming around the Kijun-sen, we then could see the market sell off once again. Similar type of pattern here with the Dow 30, something of a symmetrical triangle. Some of these internal troughs here aren't quite even, but this is the real world. This is how these patterns tend to develop. They don't develop as we see them always in the textbooks, but what we're waiting for here is either a bullish close above the upper boundary or a bearish close down below, and then some strong follow through. If we do see a breakout to the upside, we could see this market test very close up towards the Ichimoku cloud. And next to the NASDAQ 100, and this market always looks very much different than the others that we're looking at, than the S&P and the Dow. Here we have a much smaller bodied candle. The range in this candle is not as big, but taking into account the gap that's opened up, another gap here in this market, the true range is probably in line with what we've seen in the other indices. The buyers have closed with control, so quite similar, but there was some selling after the open, but the market found support at the 42.48 level of previous support and previous resistance. Now, for the prior day's trading, we saw that small window or gap that was opened up, and the market did close that straight away today. So it suggested that the buyers have been very, very strong in this market today, and the market just taking out their previous swing high in a bullish manner suggests we could see the NASDAQ continue to trade high, but we will need to breach through 43.08 resistance. In terms of Ichimoku, we are trading below the Ichimoku cloud, so a negative bias in that longer term time frame, supported by the Chica span, but bullish in the medium and fast term time frames. We're trading above the Kijun-sen and the Tenkan-sen, but interesting mix of momentum here in terms of the trends. If we look at the angle of the Tenkan-sen, it's pointing up quite sharply, reflecting solid upside momentum, but the Kijun-sen is quite flat, and that's representing that we have quite a neutral market in the medium term time frame, and a market that's in equilibrium, and that's because we've seen the market congesting here and hovering above and below the Kijun-sen indicator, oscillating above and below, so equilibrium within that medium term time frame. What we'll be looking for is the buyers to potentially come in, or for the sellers to come into this market in line with the longer term time frame to the downside at the moment, but very strong support down below where the market's trading, with the window, the Kijun-sen, the Tenkan-sen down to about 4198, and then very strong support all the way down to about 4089. Next, let's take a look at some of the asset class ETFs, and firstly looking to the Vanguard FTSE All World equities ETF, and we're comparing that, and this is without the US market included, and comparing that to the SPY ETF, the S&P 500, generally representing the US equities, and here we see the market trading down below the Ichimoku cloud and the Kijun-sen indicator, so world equities are trending down in the medium and longer term time frame, but just bullish in the fast term time frame. But looking at the relative strength comparative, down around that lower band, testing outside of their momentum of that relative strength comparative is down, so suggesting that the US equities are outperforming all equities, all other equities around the world, all other global equities. But that's because this ETF is actually underperforming the S&P 500. Next to IGF, the Global Infrastructure ETF, and trading down below the Ichimoku cloud and the Kijun-sen, very similar to the World Equities ETF. So a negative market in two timeframes, quite neutral in the medium term timeframe by testing around the Tenkan-sen, but on a relative strength comparative basis, starting to underperform over the last week or so, and momentum of that relative strength is trending down quite strongly and is now down below 100%. Next, looking at VNQ, so looking internally at the REITs, the real estate trust ETFs in the US, and here we see a negative market in all three timeframes, supported by the Chica span. The market congesting, forming something of a wedge type pattern. Relative strength comparative is quite weak compared to the overall equities market, so strongly underperforming the equities market. Momentum has formed something of a divergence, so we could see that momentum start to kick up, but at the moment no signs on the relative strength chart, still down below that bottom barrier. Next to the gold ETF, GLD is the code, and here we see a market that's trading down below the Ichimoku indicators, the Kijun-sen and the Tenkan-sen, so bearish in the medium and fast term timeframes, neutral in the longer term timeframe by trading within the cloud. And if we look at this over the last week or so, performing within the bands here on relative strength comparative terms, so not an underperformance nor an outperformance, quite a neutral performance, but looking at momentum of that relative strength, now trending down quite strongly down below that lower band, and suggesting that we could see the momentum of the relative strength comparative continue to come off. So it means that in the near future, if this market continues to trend down, we could see it start to underperform the overall US equities market. And to TLT, which is the 20+ year Treasury Bond Fund, and still a bullish market in the longer term time frame, so there is hope here for the buyers to potentially trade the market higher. We do have the market trading well below the Kijun-sen indicator, so looking a little bit out of equilibrium here, and we could see a bounce here back towards that equilibrium suggested by the Kijun-sen, trading below the Tenkan-sen as well, so bearish in both the medium term and fast term timeframes. In terms of relative strength comparative, trading on a par with equities, so no strong outperformance or underperformance, and momentum is on a par, it's quite even, still up above the 100% level though, so suggesting that we're not seeing any strong outperformance or underperformance of bonds versus or in the longer term bonds versus the overall US equities market.